This podcast is for financial professional use only and is not intended for use with the public. Material is for informational purposes only and is not intended to provide tax, legal, or investment advice. The opinions expressed in this podcast are those of the participants and do not necessarily reflect the views of Ash Brokerage. Welcome to Accumulation to Activation, the podcast that breathes life into your retirement planning strategies. If you're an advisor aiming to elevate your practice, deepen client relationships, and stay ahead of retirement income trends, we'll help you capture the opportunities on your doorstep and increase your impact. Each episode, we'll unpack the forces reshaping our industry, from the $44 trillion generational wealth transfer and the evolution of income planning to behavioral shifts, legislative updates, and breakthrough solutions that redefine financial security. Here are your hosts, Mike McGlothlin and Tim Ash.
Hi, everybody, and welcome back to the Accumulation to Activation podcast. I'm one of your hosts, Mike McGlothlin. I'm the Executive Vice President of Ash Brokerage's Retirement Division, and my co-host is Tim Ash, our CEO. Tim, you want to say a couple words to start off?
Well, happy to do so, Mike, and always great to be with you. These sessions are intended to help educate our advisors, and we are definitely passionate about that. And we're going to bring up topics each time we do these sessions that hopefully inspire you to want to talk to your clients about things or motivate you to want to look at different solutions. And they're going to be topics that, hey, you don't have to agree with us, right? This is just conversation. It's education. And it's a way for us to share what we're seeing, what we're hearing from the advisors that we serve. And just FYI, nationally, we'll serve well over 10,000 financial advisors. These are not insurance people. These are people that manage wealth, manage money, do financial planning, do retirement planning, income planning. And what we want to do for all of you is be a resource to help you better serve those clients and families.
Well, thank you. And one of the most significant pieces of legislation that has occurred in 2025 is the One Big Beautiful Bill. Did a lot of good things in terms of giving clarity for estate planning and some taxation. But I also think, Tim, that it's really important of a discussion about what it did not do. Anytime that you have significant legislation, it's always important to discuss what the unintended consequences are and then also what it did not do. And it did not change the landscape of retirement income accumulation. The amount that you can save in IRAs, the amount that can be put into Roth IRAs, those have been consistent. The Secure Act did a lot of things in terms of raising the threshold for qualified longevity annuity contracts. And so the One Big Beautiful Bill was pretty not benign from a pure retirement standpoint. However, from an estate and wealth taxation standpoint, I think that it gave some clarity. And I know that you work with our protection team closely. Talk about some of the extensions of the Tax Cut and Jobs Act that the One Big Beautiful Bill did.
Sure. So we'll call it Triple B from now on. And that's not a good rating for an insurance company, by the way. Sorry for the bad joke here on our podcast. But what we did get was some clarity, at least for now, on the estate tax exemption. So we're now, as we go into 2026, a married couple will be able to transfer up to $30 million estate tax free to the next generation. And I know there's some fodder out there around this. Is this permanent? I don't know that I've ever seen a tax bill that's been deemed permanent. So my thought is do the planning while you know what the planning says you are able to do. And right now we have an exemption up to 30 million. The other thing that I think is important to note, and probably all of you listening in, you might go, well, we already know that, Tim and Mike, but you have $19,000 per person that you can transfer annually to do gift tax free. And I encourage your families that have the wherewithal to do that to consider it. Mike, you said it earlier, the Triple B did not change anything on contributions or limit them or do anything to required minimum distributions. And so what we talked about in episode 1 is qualified plans still should be in your strike zone of how you're helping clients plan around those and have those conversations around it. I think, Mike, you gave me an interesting stat earlier in conversation, not in this podcast setting, but you said someone that has a $1 million RIA is going to be taxed the same as someone with a $31 million estate. Could you elaborate on that for the audience?
Yeah, I think that that's a huge misconception, especially with all the talk around the Tax Cut and Jobs Act in terms of extending out um, the exemption limits. You know, if you're a small, closely held business owner, you could go ahead and, as you just said, have $30 million, which would be free of federal estate tax and would pass to the next generation without that tax. And then if you had 31 million, then that would get you into above the exemption. And let's just assume a 40% tax bracket, and that's $400,000. Well, here's the problem with middle America, mass affluent. Many people have saved. They are the millionaire next door because of their 401k or their IRA. And that taxation, while it still may be free from federal estate tax, it is still subject to income taxation when it goes to the next generation. And that's hard to hide. And so for $1 million 401k, that beneficiary is going to pay ordinary income tax. And typically, giving normal life expectancy, that beneficiary is at or near their highest or peak earning years, and therefore they're going to get taxed at the highest rate. And so that $1 million IRA may get taxed at as much as 40%. And then also you would tack on some of the states that have state income taxes. And then it's not unusual to see a 45 to 50% erosion of that IRA. Very easy to see that.
Yeah, you make a great point there. And while qualified plans have been great accumulation instruments over one's lifetime while they're working, they're really one of the worst assets that you can transfer, no matter if you have an estate tax or not. The income tax is going to rear its head at some point in time. And what we can do is help, what I like to say, come up with strategies, techniques on how we might be able to minimize what that impact looks like over one's lifetime. And we have a concept that you and I have talked about, and it's really involving my friends on the protection side of the house, on the life insurance side, but it's called annuity arbitrage, because payout rates on lifetime income annuities are here, and life insurance premiums are here, assuming you have a healthy, I'm going to say reasonably healthy retiree. And we see it all the time. So there are so many strategies and techniques, and then we can make money. This is probably not the right way to say it, but I'm going to, again, you can throw me under the bus if you like, but I like to say tax free forever. Is there a way that we can help families create a tax free forever strategy for the next generation? And forever's a long time, and the next generation and beyond. And there are ways that you can smartly design annuities and life insurance to create that structure. Again, we're in the current tax system that we're in right now, and life insurance death benefits enjoy that income tax free and potentially estate tax free payment to the next generation. And there is not only annuity arbitrage, there's arbitrage on gender. So male, female, distinct. The fixed indexed annuity products are not based on male or female. SPIAs and DIAs, so single premium immediate annuities and deferred income annuities, are based on male, female. FIAs, or fixed indexed annuities with guaranteed lifetime withdrawal benefits, are not. So there's an advantage for the ladies in our life, the women in our life. They live longer statistically. So guess what? You're getting a higher payout than your male counterpart would. So what we do, again, I'm gonna use the word education probably 1,000 times in these podcasts. That's what this is. Look for ideas, look for ways, be curious about how you can improve that income story and also mitigate and lower taxation, despite what just took place with the Triple B bill.
You're exactly right, Tim. There are so many different tools out there to help advisors have this conversation and to be science and math behind it as opposed to just, oh, we need to do something else. We have a great ability to deploy a lot of software with Journey Guide. Also, our annuity performance review is just absolutely killing it. There's even a different form of arbitrage than what you described. Obviously, we can get a higher payout and then help pay for that life insurance premium, which there's no better way in order to transfer this tax burden and get tax-free cash to pay for that. But also what we're finding is a lot of clients say, I don't need the extra income and I don't want to necessarily pay the extra tax burden. And therefore, I'm going to free up cash that can go to long-term care, which is a part of healthcare that you talked about in episode 1. So we can create a lot of capital arbitrage in addition to income arbitrage. And we have the tools, we have the technique, we have the expertise to help you have this conversation over a long period of time. And let's face it, this wealth is going to transfer over the next 25, 35 years. This problem and this opportunity is not going to go away anytime soon. So, Tim, we're going to wrap up this session here. We've promised everybody to keep it to between 15 and 20 minutes in between appointments and stuff. Let's finish up here with 1 to 2 minutes of Tim's take on this episode.
All right. Well, thank you. Again, appreciate your thought leadership. The thought here is that I'd like to close with is tax planning is not going to be static. It's going to always evolve and change. So even though we had the big, beautiful bill get passed, 10 years from now, something else is going to be standing in the path of your families. And so you as the advisors and your firm and your successors are going to be dealing with big issues down the road. One thing I can say here, you will never, ever apologize for providing someone with a guaranteed lifetime income stream, ever. And I encourage you to look at this as a part of your investment thesis, your investment philosophy. We'll do the math, we'll do the science, as Mike said, and we have technology that can assist you in doing so. We also understand great technology programs like Money Guide Pro and eMoney and other tools that are out there. So the point is that overall income planning with guaranteed income is something that will likely improve outcome for a bulk of your clients that you're serving. So with that, just encourage you to use our team, use our resources. We have a staff of just great experts. They've been doing this a long time, and we're just eager and look forward to serving you and ultimately your clients on your behalf. And thank you. Appreciate you, Mike.
Thank you. Thank you for taking time to be on this podcast. We appreciate it.
It's my pleasure.
Like Tim said, we're going to try to keep this to 15 to 20 minutes to be respectful of your time, but still provide meaningful education, opportunity, and sales ideas. So make sure that you like and subscribe to this podcast and look for us on your most favorite platform. Join us in a couple weeks for some more education and more ideas to help grow your business efficiently and effectively.
This episode of Accumulation to Activation was produced by Ash Brokerage. For more on the most pressing and critical issues facing financial advisors today, be sure to subscribe, leave a review, and share this episode with a colleague. For more resources, visit us at ashbrokerage.com or reach out to our team at 800-589-3000. Let's start a strategic conversation about how you can be more efficient with your retirement income and legacy planning solutions. References to legislation, tax rates and limits, and financial strategies are based on current IRS values and may change in the future. No guarantees are made regarding financial outcomes, and product mentions are for illustrative purposes only. Tax outcomes vary based on individual circumstances and should be reviewed with a qualified tax professional